Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for January 28th through the 1st of February 2019. We're going to take a quick look at last week's changes for the week between the 21st and the 25th. Then we're going to dive in, take a look at the S&P 500, the four main indexes, the emerging markets, current stock futures looking positive going into next week. We'll see how that kind of changes throughout the weekend. We'll take a look at what stocks were most active after hours. Take a look at the entire S&P 500 as a whole for the week. Take a look at financials. Financials have been bouncing back. I believe it was Citibank, which is one of the highest financials currently year to date. Then take a look at home builders, oil, the dollar, silver, gold, bonds, and interest rates right now for mortgages. So that's what we're going to be doing in today's video. So if you are brand new to the channel, hit the subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions, want to drop a comment below, say hello, drop it in the comment section. I always appreciate all your guys' feedback and comments. And let's go ahead and get into it. So last week's the stock market there, S&P went down slightly. Everything was flat. We covered that on our weekly recap, that the market was flat. We expected Apple, we knew Apple was going to be during their earnings on Tuesday, and my prediction, depending on how their earnings were kind of playing out, I would see them bouncing above 164, and that's what took place this week. So S&P fell back slightly, 0.22, Dow Jones up 0.12, Nasdaq up 0.11, and then my portfolio was down 0.23, and that was a little bit of an Apple sell-off last week primarily, and then that all recovered here this week. So those were the changes last week. Taking a look here at the S&P 500 for this week, we can see here Monday, Tuesday, a little bit of negativity out there, but after Apple announced their earnings, you can see a huge spike here, which affected the entire market here. Wednesday, Thursday, and Friday, all positive for a 5-day change, up 1.57%. Year-to-date, up nearly 8%. This reminds me a lot of last year. Dow Jones here again, Monday, Tuesday after hours here, Tuesday after Apple announced their earnings. Again, the entire market here spiked up Wednesday, Thursday, Friday. Thursday basically flat on the day. Dow Jones ending up 1.32% for the 5-day change. Year to date up 7.44%. This one is now in second place, I believe. Nope, third place, right behind the Nasdaq there. The Nasdaq this week again, Monday, Tuesday there. Facebook announced earnings this week as well, which really helped out the Nasdaq. So here, Wednesday up 2.2%, Thursday 1.32%, Friday bit of a pullback there, but pretty much flat on Friday. Not a lot of news out there. We had the unemployment or the numbers come out with unemployment, the job numbers. They were all positive, more jobs out there, but unemployment dropped slightly, I believe, by a very small amount, or increased slightly, but didn't make any sort of a difference there. So year-to-date, Nasdaq up in second place here, up 9.47%. And the Russell 2000 here, Monday, Tuesday again. We didn't know how the market would play out. That's sort of pretty much how the entire market started this week. We were all waiting for Apple to come out and announce their earnings. And then, once that took place, it sort of made everybody give a sigh of relief. We already knew there was a slowdown over in China. We knew that Apple, they had already previously priced all of that in as they came out earlier and said that, expecting a slowdown over in China. So not much of a fallback. So here, emerging markets, 3 out of the 5 days positive, 5-day change up 1.33%. Year-to-date up 9.47%. But our Nasdaq here is our current year-to-date winner. So nationally, this is looking a little bit better. Russell 2000, a lot of these small to mid-cap stocks within the United States and such, up 11.38%. Now, stock futures, as we had said a little earlier, they're currently looking positive here going into Monday. That can, of course, all change depending on what sort of news is released here on the weekend. But currently, we might expect Monday to be positive here. So some of our leaders here in the after hours are anything familiar? No, not a whole lot of ticker symbols there that I recognize. We have Charles Schwab there, so some of our laggards, they're down. Not too many. Apple Hospitality, that's a REIT there. Skyworks Solutions down 1.26. So here, most active stocks in the after hours, we had General Electric, Sirius Holdings, Microsoft coming back up slightly. I know they were kind of knocked a little bit around this week. Apple up slightly, 0.02. CenturyLink, basically flat. Coca-Cola, Intel, and a few others. So We had some good movement, not too much. It was looking pretty much positive there in the after hours. So again, that kind of plays a part there with stock futures. Now the S&P 500 as a whole, we can see that Microsoft, they got slapped around this week. They went down 4.10%. Amazon here down 2.65%. Nvidia losing nearly 10%, down 9.63%. Dow DuPont there over in the chemicals and such down 7.43%. Amagen biotech, company down nearly 6%. Bank of America. Bank of America year to date was already up. If we look at year to date performance, Bank of America needed to pull back. Look at this thing, up 15.18%. Citigroup up 22.3%. So some very big movements here year to date. Basically, all the entire S&P 500 here is basically positive year to date, with the exception here of AVI down 12.68%. Qualcomm down 12.83%. I know CenturyLink also sold off, but they're not within the S&P, I don't believe. So just kind of taking a look here at the week again. We can see Apple after earnings here bounced up nice 5.5%. That really helped my portfolio, my IRA push forward and kind of helped beat out the indexes this week. Also healthcare here. So overall, not a whole lot of areas here that were really focused here. We had some mixture here between JP Morgan, Bank of America, Wells Fargo. So a lot of the financials are negative for the week, whereas JP Morgan did stay positive, and that is because year to date they're not out on top right now. They're pretty much along with the other ones here, so 6.41%. And that is the S&P 500 snapshot there as the week. Now, financials here, we already saw that. They're about flat, 50-50 there between JP Morgan, Wells Fargo, and some of the others. So 5-day change for financials here, up 0.19%. Home builders, up 3.89%. We had mortgage, the Fed came out on Wednesday, said, hey, we're not going to be raising rates. Everybody was expecting that. Well, I was expecting that. I'm thinking that they're not going to be raising rates until sometime after July. And then we may have 1 or 2 rate hikes after July, and then see how that kind of plays out. The economy is looking strong, but at the same time, they don't want to nudge it too hard that it may imbalance it and cause it to kind of implode. So January's last tidbits here of the oil, we can go ahead and pause it, read through it. Oil prices dropped there. Oil prices dropped at the very beginning. I believe oil was actually positive this week, but Monday they fell by 2.67%. Positive for the remainder of the week here. 5-day change up 3.38%. Year to date, oil is really bouncing back very hard, up 20.39% year to date. The dollar this week, we saw all the stock market go positive here. But when the stock market goes positive, you can generally know that the dollar is going to be going down here. So 5-day change, we can see the dollar is now at 95.62, down from around 95.76. So not too much there. Fed came out not raising rates. We can see that drawdown there. Silver, gold, and bonds all positive this week. So silver, kind of unusual. Normally when you see the stock market positive, as positive as it has been this week, silver and gold and bonds generally drop down here, whereas here silver was already depressed so much that it's 5-day change of 1.22%, year to date 2.75. Gold also followed suit there, 5-day change up 1.33%, year to date up 2.68%. And bonds here, looks like bond ticker symbol BND went ex-dividend today on Friday, and they're going to be paying out nearly 20 cents per share to their shareholders. And this one here, up 0.28% for the 5-day change. Year to date, up 0.58%. Now, current bonds, nothing really changed here. We can see the 10-year kind of starting to begin rising back up. I believe that was one of the ones that was after the Fed came out announcing that they're not going to be increasing their rates. I believe the 10-year real started to re-increase itself. So mortgage rates down to 4.5. I believe, I don't know what last week's were. I need to write these down prior. Some of these change consistently week to week. So this week it's 4.5. I'd have to look at my notes for last week as to what they were. Now, we already saw what the changes for last week's were. So some of the news that we posted over on Facebook this week. I'm looking at houses again. So I just refinanced my 3-bedroom, 1-bath. I got some cash out. I'm moving that cash into because it was paid out to me, the person. My home was refinanced from my LLC to me, the person. I have to go call the title company and do a deed of trust and quick claim it back into my LLC. I work at the credit union that I got my loan from, so I just let them know that I'm going to be doing it. That way they don't think I'm selling it. And then I took that cash that I got paid out to myself, and I'm moving that personally from my personal account to my other personal account in order to pay off my HELOC right now that I used to purchase my duplex. So I will have a mortgage on the 3-bedroom, 1-bath, but my HELOC will get paid off, which will free up $80,000 of credit that I can use. And then I am still waiting on my duplex, the other side, to get rented out. Talked to my property manager, and they said that they've had applicants, but they are not at the right area that they're looking for, so they're still trying to fill it. But they've had applications, but there just haven't been something that they've wanted to kind of fill it with. So that's completely fine. It's better to have a vacant home versus just filling it because you want somebody in it and they don't qualify and they might tear up your property, which I do not want. So I'd rather just have them wait a little bit, fill it correctly, and then my other one's already rented. So my 3-bedroom, 1-bath, that's rented out, and my other one unit of my duplex is rented out. So those are already covering my mortgage. That's about $500. And the other two properties together are currently grossing about $2,000. So that's all kind of going there. I made my stock buys, so new Monday buys. So I made my buys for this week, but I didn't make a video covering it because I only bought 2 stocks. I bought Apple and I bought Altria. These were the 2 stocks that I felt were low. Apple was going to be doing their earnings. Everything was already priced in Apple. They already told everybody that their iPhones were not doing amazing right now. We saw that. It's not going to be until after the 5G that users begin to rotate their units. Service is still growing. iPads, their wearables, every other sector, segments within their company is growing besides iPhones, and iPhones will eventually get to that point. So I've been buying Apple the last few weeks, kind of adding more and averaging down into that specific stock. So one of the things here I didn't post, I believe I posted it over on my YouTube channel, was that, don't spend your money trying to buy into specific courses. And there's a lot of YouTubers out there that have their own courses and such. Let's see if I can find what I posted, but I will do that here on the side here. So I try to save myself $14 on registered agent costs. So I've actually created an article over on my website going over if you have a business, should you run it as a sole proprietorship or an LLC. So I run my real estate business in an LLC just to be with, separate myself as liability there while I have renters where there may be some sort of an issue there. But I went ahead and created that. So after hours, Apple jumped up 3%. They finished up 5% the next day. Fed came out on Wednesday saying, hey, we're not going to be increasing rates. We already expected this. Fed, they're not going to be raising rates till probably after July is what I'm expecting. So holding strong and ready. eBay announced that they're paying out a dividend here of 56 cents. I kind of did the math there and kind of displayed that. Merrill Edge, if you guys use Merrill Edge, I still use Merrill Edge for my own IRA and Roth IRA, and I reached out to them saying, hey, I heard that you guys offer free trades for gold members, but I didn't see it on their website. They said yes, they just started an announcement that if you have $20,000 sitting in your account over on Merrill Edge and you're a gold member, you will receive 10 free trades, $0 trades on stocks and ETFs. So that's a pretty good. Merrill Edge is one of the best traditional brokers. It's not a Robinhood and M1 Finance or a Rebull and such. So I will probably, great platform there. I did my 1 month recap for January for M1 Finance. I was up nearly 6% for the entire M1 Finance portfolio on that end. Now, January wise, I came out, did all my numbers, did a combination of the M1 Finance, Roth IRA, and the individual account, my Merrill Edge IRA, Roth IRA, my Roth 401k, my thrift savings plan, and all of those funds together minus the new equity that was added in during the month of January. That made a difference for the total change in January of up 7.84%. So right along there with the S&P 500, not quite with the Dow Jones there. I'm missing it, just the Dow Jones. I beat out the Dow Jones, but staying pretty much keeping up with the S&P right there year to date currently. Now, I made an article here. Again, this is the sole proprietorship or the LLC. Kind of went over why you would choose one over another, depending on your size of your business and the liability that you would be withheld to in sort of situations. So I started creating a new dividend report. This is something I wanted to kind of start. I had started this back in the past, but it was more, it's a lot of fun to just kind of keep track of your dividend growth that as you're progressing through your dividend investments and portfolio. So I thought this would be a good little addition to kind of keep track. I'll have that one loaded up here in just a second. Stock market this week. So this week's stock market from the 28th of January until the 1st of February, the S&P 500 went up 1.56%. Where'd it go? Yeah, 1.57% there. This is not rounded up to the numbers here. So 1.56 for the S&P, Dow Jones 1.31, Nasdaq 1.37, and then my portfolio this week went 2.76%. So that was mainly a lot of Apple and then some of the other stocks there within the portfolio all drove it higher. So this is what my dividend buys and dividend income is going to look like here. It's going to have what stocks paid out. These are all within the Roth IRA. It's going to have what stocks I purchased per week. So in the first week of January, second week, third week, the miscellaneous dividend stocks that paid out in the middle of the week and repurchased $18 worth of stock. Fourth week and the fifth week of January, it's going to show that I added X amount of money per week for a total of $576.90 of new equity. And then going forward, all of the new equity that I added into the market plus the reinvested dividends increased my income going forward by $22 in a single month. I am now making an extra $22 going forward for the remainder of 2019. Now, I also talked about what stocks increased their dividends. So Consolidated Edison increased their dividend here, and Kimberly-Clark increased their dividend there for the month of January. And then I didn't start the Roth IRA until January 2018. But going forward, I'm going to begin to show how much of an increase this current, February 2019 is in comparison to February 2018. It's going to begin to show that sort of comparison. So that is basically all I wanted to cover in today's video. If you guys have any questions that was covered in today's video, drop it in the comment section below. I always read and reply to all your guys' comments. If you are brand new to the channel, hit the subscribe button. If you do enjoy the content, hit the thumbs up. And of course, that is primarily it. This is the one I wanted to show you here. I'm not going to try and have a paywall where I'll charge you $10, $20 to just know my buys. That's not what you should be doing with your cash. I invested $115.38 plus $4.17 of dividends between Apple and Altria. That increased my total dividend income just for this week by adding that capital by $5.44. So it's better that you invest your own money for your future. If you're paying $20 a month, multiply that by 12. That is what? I can't do the math. $240 maybe? I'm not sure. I can't think right now. 20 by 12. Yep, $240. So that's $240 that you're paying to somebody else to just know what they are buying. Is it really worth it to shave off $240 of the income and capital that you could be invested in your portfolio? Is it going to make a difference whether you buy their stocks or don't buy their stocks? Is that going to make your little difference there? So that is primarily it. I didn't want to paywall anybody, and I don't think anybody should have to be paywalled for that sort of information. So that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.